Right, Ledgers, good evening. How is everybody? Can everybody hear me? And can you see Delta Exchange website? Yes, full on transparent, full on less out transparent stream. The disclosure. Yes, this is it. This is it. Well, I'm glad you guys were entertained. Just give me a confirmation you can hear me. Good. So we've got a good guest on today. One of my mentors, WMD. He's got a presentation, so he's always sharing off. One of the guys I can personally vouch for. He knows his stuff. If you know him, if you know, you know. So let's get the disclosures out the way with, as you do, and we'll just get going. So welcome back once again for another big Monday evening Bitcoin for Ledgers weekly live stream. Before we start, as always, we need to acknowledge and thank our sponsors. It's because of them that we can bring you this content. Of course, it's Delta Exchange. So if you like what you see, and you can join me by signing up to Delta using the link in the description, and by using that unique TraderSZ link, you will get access to a number of very healthy deposit bonuses for new users, and up to $30,000 deposit bonus as well. Obviously, terms and conditions. Finally, as ever, nothing in this video stream constitutes financial advice in any way. Trading crypto comes with high risk element, and you should always consult with a financial professional before embarking on any activity of this kind. Now that disclosure is done, disclose. Bloody hell, I'm getting tongue tied. Disclosures are done. Okay. So what do we do now? Well, Bitcoin, it's still, I'm not getting too excited over Bitcoin. We're gonna go over it. We'll go over last week's plans quickly and see what's happening. So briefly going over last week, it was around here, and I said any pull up, okay, invalidation above here, we're looking towards here. It came close enough towards here, enough to take some profits. So when the pullback, some weakness here into resistance. What is that resistance level? All these levels have been covered before there. So as soon the closer to invalidation, the better your entry. On the lower time frame, whatever indicator or entry technique you use, you knew you were wrong above here. It dropped. And that's more or less, and I'm in the UK. So that's about it. It hit that. It didn't quite get there, but it was enough to take some off. And if you're taking a loss on this, then you got some issues with you. And that's why I'm sticking to level plays, and then it just spiked back up. So what happens here? I still hold the. I don't know if I hold that view anymore. And this is the thing. I may have a swing with you even, but sometimes I'll be quick to change that. Okay. So let's just stick to the topic, and then we'll go over a few else when or if the time comes. Okay. Otherwise, it's distracting. I still maintain that okay, we are within here, and if this was a 5-minute chart, we want to retest it. That's something that may be enough. To be honest with you, crypto doesn't quite get to the level. I'm going to show you an example of okay, maybe this is the bottom. Okay, I don't know if it is. I personally think it'll be range bound, but what I think of what the market is are two different things. Excuse me, it matters not to me. But I'm going to give an example, okay, of what I mean by this. So what we've got here is, let's look at a previous example. We've got that high there, right? I've been over this before, but it's a good reminder, and we've got that high there. So the sort of pattern, I use fractals, but don't necessarily always have to. We got this sort of formation, right? Where at this point, you would have thought, okay, maybe come into here, but it just took out that low and then pushed up, okay? What if we're getting something similar here now? Now, don't forget about how high it goes. I'm talking about the bottom here. As for targets, we'll get to that in a minute, okay? But you could be getting something like this, and then later on, it comes down, fills all this in, etc., and then rallies up. So what I'm thinking, okay, let's go for the clean chart. At what point would I be confident that this is ready to break out? There's one thing playing it level to level, then playing the breakout. So this is where the ranges are. So we've still got previous all-time high here. That would be an objective, okay? Now what is the range we're looking at? So I'm going to change the color here, and let's go for, I don't know, let's go for grey. No, does it make a difference? No, let's go for green. Okay, and what we need to, in my opinion, get back above is here. What's around here? No, get back. Okay, there. Why there? Because this is actually a range, isn't it? Consolidation, deviation, go back to black. Deviation, back into the range, deviation, back up to range high, deviation, back to range low, it's supported there, broke down. Now what if this is a bigger deviation? So if it was to get back above here, then our target is set, isn't it? The base of this consolidation as target 1, and then obviously previous range high. And then back above and clean break above that, then we start talking about higher up objectives. So far what I've mentioned, is that clear? Before I move on. Okay? And then when we mark out downside scenarios, I'm not saying it's over complete to the downside, but after this action, I might have to change my view now. And even if I change my view, it's just level to level anyway. I'm not calling for massive targets. So add back in those levels, and that's that same level there. So, okay, if you didn't get on board here, okay, that's fine. What we've got here is some sort of basic chart pattern. I prefer the alts really right now. I mean, Bitcoin being Bitcoin, how we draw this, it doesn't really matter to me. The key point is, you know, consolidate here and then reclaim and hold. And then that would say to me, you're probably going to go towards here, this region as target. Okay. After that, we'll deal with the problem then. We'll deal with what's happening after that. And that would be my play. The breakout play still remains the same to me. This is also a previous small time frame range high. If it breaks above here, and say if it was to deviate back below, well, I will treat it same play as this deviation. That would be a level to level play for me from there towards there. If it was to break back above, and this I'm seeing, if this is my deviation, this will tell me if it's a deviation or not. If it then gets back above, and that would tell me that we're ready to blast off towards 71k, invalidation below the consolidation that pushed it above, and that towards there. And then extended targets would be, assuming that's the low, okay, assuming that's the low, I can then take that high, swing high to that swing low, mark out fib extension. So 71k, we've spoken about this in previous streams, but it would then be the 1.272, 1.618 as further extended targets. And that would be, for me, in my opinion, a breakout, and see how high it goes. Okay, it may even be capped. It may even do one of these ones where it has 1 top, 2 top, 3 tops. It may even be limited to this, and then if it was to do this again, that would still be a short for me. At that point, I think it'd be a bigger short. At that point, I think it would come down here and then maybe go back up there. But that's not here or there. Let's just deal with that at the time. But if it was to do that, okay, if it was to do that, at that point, where are the stops resting? This would be the clear area for objective, just in case, you know, because I always plan ahead. I know exactly what I need to see, where I need to see it, and what needs to happen. It was me holding spot BTC to anything. Let's focus on this, okay? So, yeah. So if it was to, for example, say do that, I'm just be prepared, okay? No point doing that, and then hit our target short weakness, and for whatever reason it came back below here. For me, that would be a big short, and I'd say towards here, okay? That's just putting that out there, just in case it happened. Maybe target 1 because that's at SR level, but target 2. That's if it was to ever happen. So if XYZ happened, then I pull the trigger, and that's it. So I have a couple of plans. I know exactly what I need to see, and if that happens, then I pull the trigger. If it doesn't, fuck it off. I'll wait. Everybody clear with that so far? Now another short scenario playing within the range, okay, is thanks a lot for the 10x scammer. Is that you cantering? I see a horse there. I think in case I'm wrong, but continuation. What do we do if it's gonna be capped towards here? Okay, because this is a big resistance area. What if this is a lower high? What if this is a lower high? You know, and distributes from here. Now there's a couple of plans here. I don't know. I'm not feeling comfortable right now. But even if I'm not feeling comfortable, that's just doesn't really matter. What I'm gonna do is I'm gonna mark out this range low. So what I do is I'm gonna focus within this region now. Okay, this range, and then I'm gonna look for the lower time frame breakdowns to increase the probability of my trade idea. Okay. So what I'm gonna do is share the video, by the way, like the video, share the video. We got WMD coming in, and it helps with the YouTube algos. So what I then do is to focus on a smaller range. So we know the breakout plays exactly what I need to see. So I'm going to split this up into a smaller range, and this is acting as a range low, isn't it? Range low. What could I say is acting as my range high? I'll go with this. See this here? But if you look at it, why am I choosing that? I mean, right above, from that level, that is what broke it up towards there. Support here, resistance. Once it deviated, it sold off. And once it deviated, resistance, it sold off. It's at resistance now. So having said that, if we were to do one of these stop, I would prefer, if it's going to go down, I'd prefer like this. If it was to do a stop run and then break down. So at this point, if it does a stop run and then holds, consolidates and breaks above, that's the long. However, if it's a quick whipsaw back up and then back down, that's my short, and I'll play it back down towards here, and that would be ping pong within this range, smaller range. So that would be target 1, and if it's got legs, if it comes into here, starts finding support, bullishness, I'll close the trade, but I'll be taking some off there, extended targets towards here, and I'm done. Maybe leave a portion on, but whatever, I will be taking off there. Why? Because market has still told me it's range bound until proven otherwise. So this would be like a fake out, wouldn't it? Some sort of fake out pattern. So it gives me that fake out pattern, like here. And that's a deviation then, isn't it? Maybe even get below here. But I know where I'm wrong. That's the key thing. Invalidation, target 1, target 2. And I'm done. I don't know. I mean, I'm not looking at market structure. I'm telling you level to level. So I don't need to know about market structure or anything. Above 65k is when I think it'll be trend. Sorry about that. Got a sore throat today. A bit under the weather. But yeah, is that clear? And that's it. So the two main ranges I'm looking at are here, and then this is the smaller one, and that's a deviation. So if we reclaim above here, we're back within here. If we follow whatever I've said, then we're back within here, and that's all I'm doing until I'm proven otherwise, and that's it. That's what I got for Bitcoin. Nothing more, nothing less. If it does this, then I step in. If not, fuck it off. Move on to Ethereum now. Similar thing. Ethereum, same thing. Is capped by, this is the previous all-time high. This is the key SR level that's capping it. All these levels are described in previous reviews. Initially we had the deviation back above. We tagged that level, took out the stops. Once it deviated back below, we got the trigger, invalidation, target, done. That was in previous review. Okay, that's up to you to decide. Each scenario varies. Each scenario varies as to how much takeoff. Just depends. Not everyone is the same one. Just practice with a fixed size, and then once you know it and you get a feel for it, then that's up to you. Not everybody's going to do it the same. What about the long scenario? Okay, what if this is genuine breakout? What if, what we're going to do? Well, it's a similar structure to Bitcoin, really, isn't it? So at what point would I say, you know what, this is ready to break out? Well, what I want to look at is how far does the market deviate above this key level, which is previous all-time high. And the level that's capping it is obviously this. Okay, there. So this region is my deviation area as proven otherwise. Deviation, back below it, towards range low. Deviation, below it, range low. So if I were to play the breakout long, okay, and this is where chart patterns help, okay, I would look to time it with Bitcoin, okay. I've got an objective in mind, which is there. So if it was to do something like this, and then break up back above, and then that's my long. Invalidation below consolidation, I took it above, target done. Extended targets would be take the high to the low. This is just basic. There's loads of ways of doing targets, but after that it would be 51.29, call it 51.20s, 54.40s, and that's it. Is everybody clear with that? That would be the breakout long play. What if a mean reversion play back in the range and the market says no, we're not ready to go yet? Well, similar to Bitcoin, exact same play. Which range are we still within? Well, we've already identified that, haven't we? We are still within here if it was going to be a deviation. Now the question is this going to be a lower high, or is it going to be another stop run and down? Well, easier way, when I have a stop run, it's preferred, it's easier for me. But if it does a stop run and then deviates back below, invalidation above here, play back down. This time around, I'll have to go for conservative targets, top of the consolidation, target 1, target 2. If it's going to really go lower, well, do I have another range to work with? Yes, it's this one here. Below the key level, that becomes a bigger deviation, which is, that's target 1, target 2. So how would I play that? Well, what's the level cap in the downside? If you look carefully, it's more or less around here, isn't it? So this is a deviation area. So this is trend continuation level to level. So say if I'm out for whatever reason, well, I can play the trend continuation, shorting it, target 1, target 2, and I'm done. Clear? And that's it. So I've got the breakout plan marked out. I've got the mean reversion plane marked out. And if it's going to be reversion, I mean, I did say previously, where do I believe it could be going? If it is, I would prefer this play here towards here personally before I swing long. If it was to do something like, if it was to do something like that, and then that, I think I'd be getting ready for a big swing long. Do something like that. That would be the perfect play in my opinion. Wipe out these guys, okay, and then full send it to new highs. That would be the best play for me in my opinion. But what I want and what the market is are two separate things. But ideal scenario would be that. So it's not. I don't think it's over just yet for bears either. I mean, we are still range bound. We haven't broken out yet. Personally, I think it's not a breakout till it breaks out. And that's it. Is everybody clear with that so far? Keeping it simple. Not too much to go over. Hello, Dr. Pierre. Okay, that's about it. I'm going to go with FBTC as well, actually. And why I think FBTC could be interesting soon. And which point do I think Ethereum really goes for it, and maybe the other alts and stuff. I mean, look at PYR. I mean, look how beautiful this chart is. I mean, I've been going on about this non-stop here, but there's a reason. I had this one person saying, oh, I remember on Twitter, some stupid woman, this guy says level to level with Bitcoin, but certain coins going up only. Well, if you look at those coins, Wild, Zava, PYR, what have they been doing? This is the problem with some people. They don't understand when Bitcoin's in a range-bound environment, alts take off. But this is what ignorance does, and then you jump on a bandwagon. I'm like, oh my god, get the fuck back in the kitchen. Like, seriously, shut the fuck up. But anyways, daily chart. No disrespect to women. But yeah, she just pissed me off. But we look at this, right? And we've got FBTC. Now, I've always spoken about, okay, there's two types of breakout patterns that happen. Okay? One is, we got the consolidation. We got the breakout. Now we could get a retest, then pull up. And it's a really strong market. Then like that, consolidation, and then continuation. So it doesn't necessarily have to come back into the consolidation here. So which one do we do? So, because I still believe that this is very bullish in my opinion. This breakout is very bullish. I'm just still trying to decide which one it's going to be. Is it going to, I would love, obviously everybody would love something like this and then take off. But what if it is the other pattern? What if, it continues up from here is the is the question. So, this is how I would play it. First and foremost, I like to mark the easy plans. For me, we got 2017 high to 2017 low to 2017 mid-range, okay? So, whatever happened, the easy play would be, say I missed a lot of it, I think there's still a portion to be played. If it was to ever reclaim the mid-range, and that is trending in my opinion, reclaiming back above this level is where, okay, I believe we trend, and at that point we go towards this region as first target. And then I don't know if it's got legs to go higher, but probably there. I would be aiming around in this region after that. So that is one range, and that's the secondary range after that. Okay, but above here is when I really think Ethereum takes off, probably the alts as well. In this situation, what do we do? I mean, I really don't know. I mean, it's resistance here, but it's looking kind of bullish. I don't know. You don't really get that gut feel. So what I'm going to do is start looking at the monthly and quarterly charts. So first, let's start with the yearly. What is that shaping up? Because if you've got the monthly, quarterly in your favor, then the lower time frames doesn't really make a difference. Because you don't want to fight the lower time frames. So yearly, it's looking quite decent so far. But obviously, towards the end of the year, could this be a wick? I don't know. Okay. I don't know. I haven't looked at historical strategy. Quarterly is not looking too bad. Obviously, things can change. Crypto being crypto, but so far it's looking decent. I think what I would have wanted to see is if we were trading back above. So if you look at what is capping the upside, we got quarterly high there. So again, I need to see maybe a quarterly close above, which obviously takes to the new year then. But I want to see price action above that, which okay doesn't tell me much. Monthly, and the monthly is key here. So I think very bullish this. But yeah, anyways, short term. I'm only going this because somebody asked me. I think it'll confluence that if this was to break out, I'd be in Ethereum over Bitcoin. So short term, can I play this short term? Well, what I've got to first identify is what is capping the market. And if it breaks above that, what would be an objective? What's capping the market and what objectives are the two most important things I look for. And then from there, I work out an invalidation. Well, we know previously that this region was capping the market before. So why is, oh, fuck you, mom. Yeah, there we go. So what we've got here is, let's say this consolidation. Once we deviate back below, sell off. Resistance here, but if it breaks above and holds, where would be the next logical target? This high here, towards there. Now that is a level to level play for me. Whether it breaks out further or not, I don't know, and I don't give a shit either. If it does, happy days. If it comes into here and rejects, well, I made my money anyway. I get the fuck out. And then I'll see if it does one of these ones. If it starts consolidating above the blue box, which is acting as resistance before it should reject as support, then once it does that and then reclaims, boom, we're ready for the breakout. And higher time frames lining up, and then we go full send to the targets I mentioned. So what I'm doing is I'm approaching from a level to level perspective, keeping in mind this could be a massive swing failure and shit the bed, or a pattern failure like this. But I'm also open to, okay, if it is gonna shit the bed, well, I know I'm gonna my exit strategy, okay. But I also know, okay, what if I do exit and call carries on with that? It's okay. So if it does a pullback and then reclaims back above, well, if it's gonna go low, I shouldn't be coming back above there, should it? So get back in there and then play full send. Stop mentioning your coins. You've asked me that twice already. I'm going to go over them one by one. Well, 8 more minutes of coins. Relax, I will. Is that clear? So, yeah, that's that. On the other hand, if it was to go lower, basic chart pattern, where would be objective for price? What would I look for trigger plan? We've got these clean lows here. First and foremost, if it's going to go lower, what's the target? Secondly, how would I play the trigger? Well, I've got this level here, haven't I? So this is key SR here. Resistance. Once it deviates back below, it sells off. Once it deviates back below, okay, this is a bit of a chop, but eventually it sells off. So if I do that, that becomes a deviation. Break below that, basic chart pattern trend line, and that's my short towards these clean lows. And then after that, I'll see what happens, but this is enough for me. If it goes lower, that's first target. If it's got legs, probably towards here then, which is the base of the move. And then we'll decide after that what happens. But I'm okay with playing this range, extended targets towards there. All I do is I know exactly what I'm going to enter, I know where I'm going to get out, and that's it. That's all I do if it's a range bound environment. Reason why I get out earlier, because it's range bound. If it's trending, my targets are extended. But if it's range bound, well, I've got to be quick to take profit, haven't I? Is that clear for everybody before I continue? Okay, let's do PYR. Go on then. There's some shit in PYR to everybody. Let's go to here. Do I have a PYR chart here? Let's go to a clean chart. PYR. Okay, we've just taken that all-time high. So what do we do here? I mean, it's just one of the charts. Sometimes it's not easy when it's at all-time high price discovery. Okay, it's not easy. It's you got to be very careful. But fundamentally I think this is solid. I've been in since 3, as you've seen me post, and FA took care of it. The conviction comes behind. You can trade level to level, that's fine. You don't really need much FA behind that, because when you're scalping, right, you're going to look at the fucking fundamentals. No, you're scalping level to level, who cares? Just taking liquidity, aren't you? You don't care about, this, that, the other. Just trade it. But then there's markets, right, they've got strong FA behind it. That's different. Okay, this could be ugly. Hopefully not. So, how would I play this? Well, what's capping them upside? So I'll like to start off with the horizontal levels. In case this is one big swing failure. Okay, you never know. I don't think it is. Now, go to the lower time frame. Okay, the day's not ended just yet. Okay. Let's go for targets. Okay, if I was going to target somewhere, so I need somewhere to target. I personally goes to 3-figure plus, but it's more or less close enough there. I reckon about 50, here would be the next objective in my opinion. 55 to 60 region, but let's go more conservative. Okay, give that black color. And after this, I'll do one more. Then I'm going to bring WMD on. Okay, there. Now, it's doing the deviation. Remember when I showed you with FBTC? Say if it was to, I don't know, break that high and do that. Well, that's doing that right now, isn't it? So what I'm going to be looking for is, okay, if you're not already on board, hit that target. If you're watching, go to the lower time frame. Okay, let's do deviation. It often does that. So I'll be looking for some sort of something like this. And if it was to reclaim back above, and then like that, towards there. I mean, I can't really put a price target, and I just think it's going to go a lot higher. So, I mean, I'm only putting a price target just for the sake of the stream. But I'm personally holding it to at least 3 figures. I think it does really well. But yeah, we'll see. I think all these metaverse coins are doing well, aren't they? So just ride the hype until it ends. Make sure you're paying yourself along the way. Then you got nothing to worry about. Okay. One more. What's the Sol? Somebody asked me Sol. AVAX. I'll do AVAX. I already did AVAX, didn't I? I'll do AVAX and I'll bring a WMD in. I know I'm boring. Let's get AVAX in. By the way, like the video. There's 289 of you here. You can't even give me 100 likes. Just for the YouTube algo. So AVAX. Okay. So what I was thinking was, initially I thought, okay, if it's gonna do a deeper pullback, right? I was eyeing around the 80 area. Okay. Why was I eyeing the 80 area? If it did the deeper pullback, but it looks to me it's gonna do the trend continuation. So we got that previous all-time high there. Okay. Now this is the consolidation accumulation at previous all-time high that took it above. So what I thought, okay, if it's going to do a deeper pullback, okay, because you never know, it could still happen, and this would be a decent area for a long run, at least the top of that range. So I said, remember from that 80 to 85 area. So if it was to come here and you consolidate here, I'm rung below 60, and then AVAX solid long term, I'll probably take it back up above to 150. So let's go over the easy target way. So if that was the high, and assume that's the low, so whatever the low is, you drag it to the low. We got targets just based on this leg alone: 168, 194, 224. Okay, I personally think it goes around 280 to 300, but just based on that, that would be the targets. Now, what if it didn't do that? The other extended targets I did mention was from that low to that high, and we got targets of around, yeah, that's the 258, yeah, let's do that. Yeah, forget that, let's not go there. So what if it's a trend continuation? Okay, what if it's going to continue from here? You know, Bitcoin carries on the consolidation range, Ethereum carries on the range. Well, let's see if we've got invalidation to work with. I think this could be a bottomed out, to be honest. But what I'm going to do is I'm going to take this leg from that high to that low. I'm going to mark out the midpoint. I mean, I would love a deeper pullback, but midpoint, no, that's not helping me. Okay, so what I'm going to do is I'm going to split this up. Okay, what I want to split this up into, actually, you know what, I think I'll do a basic trendline pattern here, can't I? One of those ones. See, this is where the trendline comes in. Does somebody draw it from there, or does someone draw it from there? It doesn't really matter to me. I'm not too fast, you know. What I'm going to do is I'm going to look for the deviation. So what is the market that was capping before? It's going to be this. This was the consolidation before. Okay, there. So for me, if I was too aggressive, I'd cut it below here. Otherwise, I want to see a daily close, but I want to see what Bitcoin does as well. But if Bitcoin can hold above and not just shit the bed, obviously all of this does depend on what Bitcoin does as well. Yes, there is the one-off coin that does its own thing. But what I'll be looking for is if we can consolidate here, then this that should have acted as support, confirms as a deviation to me, and above the blue box is where I go for the longs target there. And if you want to play short-term targets, just do what I've just done. Take that high, assuming that's the low, 160, 176, 194, and that's it. But the key thing, and if you gave me the trigger and they start to break back below here, I look to cut it early, scale out, get the fuck out, and wait for the 80s, 80 to 85, if that was to happen. So if I take the loss, I know exactly why I'm wrong. I know to cut it. The main thing is if you've got in violation to work with, and you know where you're wrong, nothing else really matters, is it? I mean, the only issue is if you're over risking. And now I'm going to bring WMD in. Okay, so has that made sense so far? Is everybody clear with my plan? I'm going to bring WMD on now. Is that clear? Oops, let me go to meeting. While he's coming in. Wild. You want me to go? Wild is doing well, isn't it? Wild World. That's another really good metaverse one, isn't it? Wild World. While he's coming on. I don't know, what can I say? I think we just shoot up, don't we? I mean, I don't know. These are the low caps. Wild World isn't, by the way. Wild World is solid fundamentally. Like I said before, either do this. It's like a basic one of those chart patterns, isn't it? And then that trend continue. Unless either it comes into here, I look to buy, or break out, I looked at 14 level. I like the 14. So it broke out of that. I think we're going to 14. It's as simple as that. Where's WMD? So that's that there. ZCX. Yes, I'm still ZCX. So the initial chart I did, okay, was on a different exchange chart. I mean, I'm just, if it goes zero, I'll just become a hodler. I think fundamentally it's strong. So let me go to ZCX. 1 second. I do like ZCX. Hang on, I think I gave the wrong password. Bear with me. Oh, it's popped up. So ZCX, I mean, long term, I mean, if you look at it, I mean, I think I got in a bit early, maybe. I think I may have got in a bit early, but I did say, I mean, I'm happy to dollar cost average. And if you remember my tweet, I started around here. Okay, so here is where I first got in. And the blue bar hasn't touched the blue bars quite yet, but it's okay. Confirmation would obviously be, you know, I think we got above here, consolidated here, and then got above. I think we shoot up. I think it's fundamentally solid if you search about it. But yeah, there, and then break above there, we go to the 10 and 12. But this is more of a spot long-term play for me. And here he is. 1 second. 1 second, make presenter. Alright, Ari. Can you hear me? You gotta unmute your mic. You're muted. You're still muted, bro. Look in the bottom left. Hello?
You got me now?
Yeah, I got you now. Let me confirm. Can everybody hear me? How's it going, bro?
All good, man. All good.
Good to have you on, man. Long overdue. Long overdue.
It's been a while. Too long.
It's been a while.
Wait, do you remember when I used to do these and I used to invite you on?
Yeah, I remember though. Yeah, how long was that ago? So
that's like 400 fucking years ago, man. The tables have turned.
Let me give you a quick intro. So this is WMD. He's my mentor from years ago. 10 years ago or something, wasn't it?
It's been a long time, man.
A long time. So he's one of my first mentors when I was first starting. Can you guys hear? Hang on. Let me just make sure they can hear. But yeah, WMD is a legend in FX. Are you doing any crypto? I've seen you trying to regulate these altcoins.
You know what? Yeah, I'm doing more crypto now than I've ever done.
How are you finding it?
I think I've. What's that?
How are you finding the crypto market? I never thought you'd ever jump in, but that's a good surprise to see.
It's crypto is getting so easy.
Yeah.
To make money, and it's insane. And I think one of the biggest problems we have with legacy markets is when volume dries up.
Yeah, right now FX.
Yeah, especially with FX, right? Where you're kind of left with 30 pip ranges, 40 pip ranges on stuff that used to do 80 pips, 100 pips, 120 pips a day. So if you look at where the hot money is and where the volatility is, because to make money, you need volatility, right? You need prices to actually move. And so that place is definitely crypto right now. And I mean, it took me a little bit of a while to transition over because I have a fixed methodology, a fixed approach, and what I needed to make sure was that the crypto markets are showing all of the same characteristics and qualities.
Yeah.
I hate the word setups, right? But I'm going to end up using it anyway. But showing all the same kind of structural transformations and rotations that you see in FX. And so once I started spotting those in crypto, I mean, it just became it was kind of inevitable, right? And so it's been quite a good ride over the course of the last year.
Happy days. So you know what? I'm gonna let you take over, and he's here to show his presentation, and just give you the mic. Do what you gotta do, bro.
All right, cool, man. So first off, to get all my disclosures out of the way, I'm only here because Side paid me an attendance fee and appearance fee. And so, you know, when you reach these kind of lofty statures of guru status, You have to charge appearance fees to come on these webinars. So bro, for some reason I can't find that transaction on the chain,
The
but
same
I'm
button
going to carry
broke.
on anyway.
I can only receive.
All right, you said you sent it, right? And I've been checking all the chain transactions. My 100 Bitcoin is not there. I can't see it anywhere, but I trust you, so I'm gonna. So I trust you. I'm gonna carry on. I was given a little bit of an open slate, guys. So what I thought I would do is to try and give you a rundown of how I trade, or one of the ways in which I trade, which you might find beneficial, and maybe to talk about how to actually get stinking filthy rich instead of just being filthy rich on its own. Because if you want to have money, why wouldn't you want to have fuck you money, as they call it, and to reach that kind of stage. And one of the things which everybody says, and you will hear, if you've been listening to Side over the course of months and years, he says it as well. I've always said it, and anyone who's been in the game a very long time, they'll all tell you the same thing, that if you want to get good at trading, if you want to get rich at trading, and you want to make money, what you need to do is to learn to do one thing, and then just to do it really, really well. All roads do not lead to Rome, but many do. And one of the problems that you have when, especially you're on social media and you're following a lot of people on social media, or even if you're on forums or on Reddit or on any other forum trying to gather information, is that people will always be telling you, you can't do it like this, you need to do it like that. And you go to someone else and somebody will say, listen, you can't be trading spot, you got to start trading options because you can only make money trading options. And after 15 minutes, you realize the guy's trying to sell you a course in trading options. You go somewhere else and a guy will say, listen, man, none of that works. You need Ichimoku Hayuwayu. And then 15 minutes later, the guy's trying to sell you, listen, man, buy this Ichimoku cloud course off me, right? Or Elliott Wave or something else. And what it is kind of very genuinely that all of you have to find your own way. You need to find that one thing that kind of works for you. Another complaint that a lot of traders have is, and a lot of traders talk about, especially at the beginning of their journeys, and it's something that a lot of people struggle with as well, is they say, I need to get consistent, and I'm just not achieving consistency in my trading. And when you look a little bit more closely at what that complaint really is, what they're really talking about is, or what the cause of the problem is, right? Because inconsistency is actually a symptom. It's a symptom of something that they're doing or an approach that they're taking. And what you quite often find is just they're trying to do too many things. They're working with horizontal levels, they're working with ranges, they're working with trend lines, they're working with moving averages, they're doing some quant and some algos, and they've just got fingers in too many different pies. And so they can't, when you're trying to do that much, what you end up with is actually information overload. And what happens is that you can't actually tell what is working and what is not actually working for you. So, so achieving consistency is really important. And the way that you achieve consistency is by applying a repeatable and replicatable approach. And again, kind of hats off to Said. I know he's been like doing these presentations a long time, but one of the things that you'll notice with what he does is that he's always consistently applying the same approach. He's not shopping around, he's not trying to do anything different. He gets it right, he gets it wrong, he puts his kind of thing out, say, okay, that fucked up there, it's wrong. And when it's right, and you can see the results in front of you. But the reason someone is able to do that is because they are exactly applying the same approach every single time. And then they're able to determine whether they have a method that works or a method which isn't actually pursuing. So that's something which is absolutely key. In origin, regardless of whether someone is trading moving averages or trend lines or horizontal levels or ranges, the key to it is the concept of support and resistance. And what I'm going to outline for you before I actually show you a bunch of charts is just some of the kind of 101. And I think a lot of you will be familiar with it, but it's often a good idea when you're building some concepts to build it from the basic building blocks, and that way all of us end up on the same page. So if we're looking at support resistance, I've just done a screen grab here, so I want to make sure that that's visible to you guys. I can't see the chat, so if there's a problem, Said, you can give me a ping, right? But yeah, okay, cool, right? So, so what is support and resistance? If we're looking at a horizontal plane, you have this level that you've determined for whatever reason. Usually, there will be some kind of structure on the left-hand side that you've learned to recognize, and you say, okay, every time I see that particular structure, if I mark a level there, then that to me represents support and resistance. And here what I want to offer you are a couple of sides of the same coin, and maybe a element which is quite easily overlooked by a lot of traders, which is that when you have this level of support and resistance, there's two ways in which you can approach this, right? So if the price was here and we said that this level is resistance, the first way that you could approach this is you could say, hey, if the price reaches that level, then my default position is going to be that actually I want to short that, looking for a rotation or reversal off of it. Invalidation will be if price breaks through it, right? And it's a resistance level. But the other way in which you would use a resistance is to say if price reaches a resistance and breaches a resistance, and at that point, I actually want to look for a follow through, and invalidation is if price ends up falling back below that level, right? So that's very kind of basic 101 support and resistance, but looking at both sides of the coin. One of the things which I do, and if I'm going to use the word specialize in and probably get laughed at or something, right? But one of the things that I specialize in, and one of the things that I've become known for, is determining where diagonal levels of support and resistance happen. And the thing about diagonal levels of support and resistance is that they're actually no different horizontal levels of support and resistance. What makes a horizontal level work is the point that you marked it from. And so if you had some kind of structure that you recognized as an SR structure, you marked a level at that point, you would have every expectation that that level would work as support and resistance when the price came to it, and it would work as support and resistance when the price breached it, right? Similarly, what actually matters with a diagonal wall is exactly the same thing, that when you're drawing a diagonal wall, you need to have some points which you're connecting on the left-hand side that you recognize as support and resistance in order to draw that diagonal trend wall, not trend line, but a trend wall, because what that needs to represent is support and resistance, in that when the price comes to test it, you'd expect for the price to rotate off of it. And if it happens that the price went up through it, you'd expect for price then to follow through, right? And so what really matters is, well, a couple of things here. Number one, that you're marking, in order for that wall to be support and resistance, you need to be marking some point of support and resistance on the left-hand side in order to create that diagonal. And then the other thing that matters, and this is really critical, is that you mark that in a way which is repeatable and replicatable. And again, this is something which a lot of people struggle with, because the structures that they're looking at on the left-hand side, if you give, and this is a complaint that I make about people trading horizontal levels as well as diagonal levels, if you throw someone the same chart 2 weeks apart and ask them, hey, can you mark all the horizontals on there and all the diagonals on there, then you throw them that same chart again a couple of weeks later, and you say, do it again, you can be guaranteed that all of those horizontals and diagonals end up at completely different places, right? And that is, if you like, the test of your ability to be able to mark a level consistently. If you're marking it consistently, you can then expect consistent price behavior, you can expect consistent decision making, you can expect consistent results. But if you're not marking your levels in the same way every single time, then you're going to always struggle and actually have inconsistent results, inconsistent decision making, and and an equity curve, which kind of which will resemble probably the kind of heart rate monitors in hospitals or something, right? And your emotional fragility will end up reflecting that also, right? So that is kind of absolutely what is key, that you mark some SR point and you mark it from the same point every single time. If you're marking it from the same point every single time, from the same structure every single time, then it figures and it computes that actually you will be able to see whether it is a good point, and you will start making consistent decisions, and especially have consistent expectations about price behavior. Okay, so that's kind of part one. I'm going to add a part 2 and part 3 and part 4 and part 5 to this, but very quickly we're going to move on to looking at charts. So I have a methodology, I have approach of, I have an approach by or a process by which I look at markets and I determine where I want to be trading and what I want to be trading. And so the next figure which I want to show you, the next structure that I just want to show you on the chalkboard, is that the market operates on a time cycle, right? And all we mean by that is that at the beginning of a particular time cycle, the price is going to behave in a certain way, and at the end of a time cycle, the price is going to behave in a certain way. And the easiest way to think about time cycles is just to think in terms of candles. And again, one of the things that you will find in a lot of the good and the great traders is that people think in terms of time cycles, and people think in terms of what behavior to be expecting at the beginning of the day and at the end of the day. What would you expect to see at the beginning of the week and at the end of the week, the beginning of the quarter and the end of the quarter, the beginning of the year and the end of the year? And this is as well what a lot of people will refer to as market environment. So if you've watched my tutorials or heard me speak, I'll often talk about market environment. Saeed talks about context or something like this. And a lot of people use a lot of different words for it. But what we're saying is actually look at the market, look at what the market is doing, think about what phase of the market cycle you're in, and then choose a strategy that fits that phase of the market cycle in order to try and make some money from it, right? So at the beginning of the cycle, it's quite typical that most markets will be making a range. I don't know, you call this accumulation, distribution, or whatever. I've lost count of all the different terms that people kind of throw out, right? But the market will be quite steady and it'll be waiting to break out. And as soon as you see that breakout, you say, hey, what we're going to be doing now is we're going to be making the body of that candle. So, and so we're breaking out here. And at that point, the best approach to be taking is to be marking resistances and saying, anytime a resistance is breached, let me chase it. There's another resistance, let it breach, chase it. There's another resistance, let it chase, breach it, right? But what happens when, what happens at the end of a cycle, right? And this is something I think that a lot of traders really miss, right? So everyone is kind of used to the idea, hey, we're going to get an expansion, we're going to get a momentum breakout, we want to be on board and to catch that momentum breakout. But what happens when the steam runs out? What happens when the market is getting ready in order to contract, in order to pull back, and in order to deflate? And knowing what that looks like is very, very important, because if you're long, that is a point at which you want to be getting at. Right? And if you're cheeky, that is the point you want to think, I can fuck up a lot of people. Everybody's trapped. I want their money. I'm going to take the other side of their trade. And you can look at getting that swing rotation at those highs and just watch people's egos crumble and watch people fall apart and become completely fragile, have nervous breakdowns and everything else that you see go on FinTwit. Sometimes they send you death threats for calling a short trade or something like this, right? But you just kind of look at it thinking, man, listen, I don't decide what the market does, right? Forgive me for being short, right? But I don't decide that. But I can read it, I can see the market, and I can say, hey, all right, that is really overextended right now. Not only is it overextended, but when a market becomes overextended, it tends to behave in a very typical fashion, right? In a very specific fashion, very specific price structures start to appear on the chart. And when you see them and when you learn to recognize them, what you can be doing is to be catching all of those rotations as price actually deflates, right? And so Said was asking earlier, what are you looking at on crypto and what is its appeal? And one of the things which I love about crypto, especially about the altcoins, is that crypto is just another penny stock market pump and dump scheme. And you have all of these coins and tokens which end up getting hugely overvalued because everybody has steamed into them. But what you have is no backstop, right? You don't have any liquidity. It's a closed ecosystem. So when people start rushing to the doors to try and get out of those trades, to cash up from those trades, that is the point at which you start finding out what is that token really worth? What is that coin really worth? And so you can look at a lot of tokens, you can look at a lot of coins, you kind of start to get a sense, hey, this is overextended. What happens as soon as people want to get out? And you're going to start discovering that the Fed doesn't step in order to be the backstop for Wilder World, right? It's not going to be...
Don't be mentioning those coins. Don't mention that coin. I'm in it. Mention XRP or something. Don't mention that.
Yeah, it's not going to be the backstop for PYR, bro.
Wait, listen.
Right? And this is the issue. It's like when it rotates, there's actually an opportunity. This is the kind of issue to consider, right? Okay. The next thing which I'm going to point out, seeing as the idea of penny stock market has come up, which is that even before you fund your first trading account, you need to have a strategic approach about the business itself, right? That how is it that in this industry, in this business, in the trading game, you're actually going to make money? What's going to be your strategic approach? And if you imagine, I used to play Monopoly a lot with the kids, and we play Ludo in our house a lot as well still, right? And if you think about playing any board game, any game at all, right? Before even a card game, like before the first hand is dealt, you have to have a kind of strategy in your mind. If you're playing Monopoly, you might have already thought about the properties you want to buy, right? Some people, they just buy every square they land on. Other people, they'll be thinking, I want to own all the train stations, I want to put a hotel in Mayfair or whatever, right? That you have to have a little bit of a kind of strategic view about what it is that you're trying to do. And so the first kind of strategic view you can have is to say, well, look, what I've got to do is I'll take a scattergun approach, right? That there's these 10 tokens, everything ends up pumping eventually, and some things end up crashing. I've got 100K, I'm going to put 10K inside each token, and guaranteed one of those is going to end up going 5 times, 10 times, 20 times, 30 times, 50 times for sure, right? But the other 9 could well crash, right? Or end up at half price. But you said, look, if I did this scattergun approach and made these investments, there's a very good chance I could make money. Now, when you're investing in a diversified portfolio in that way, it is going to be diversified, and it is going to be, I guess, what you guys would refer to as kind of non-leveraged spot transactions. Maybe you're actually holding the physical tokens and things like that. But what you're kind of accepting at that point, if you think about it, is to say, I've invested in this token. I accept that this can devalue by 50% before I know I'm wrong. And actually, I'm prepared to let it go to 0, right? So if I bought 10 grand's worth, that's my 1R. That's my risk in this, right? And it's one approach, and it's an approach that can work really, really well, but you have to be very patient. You also have to think about your monetary goals, right? That, you have some funds, how quickly can you grow those funds? Because you're in trading to make money, right? And if you're coming to the market with 100 grand or 500 or a million to begin with, and you're investing in that diversified way, sure enough, you will make money, and you will make enough money where it's kind of worth it. But if you're coming to the market with a much smaller pot, is not always going to be that straightforward, right? Because you might make a really fantastic percentage return, but when you look at that percentage return in money terms, you're going to be kind of scratching your head and saying, was it really worth it, right? And so the point of getting technical is to say, what if I can make, what if I can trade a technical level? What if I can trade that level with margin? What if I can trade that level without allowing 100% risk, i.e., this token has to drop to zero? What if I can use a stop, which is 20% price move or 25% price move, and to be able to get out and exit and actually know that I'm wrong? That's when you actually start maximizing the money that you have and utilizing it the most, right? So kind of keep that thought in mind too, right? And being my age now, quite often I go off on a tangent and I'll talk about something and I'll completely forget why I even went there, right? So keep that in mind, and we'll come back and we'll come back to our core subject, right? That you get these breakouts, you get these rotations. Those rotations, they're technical in nature, and so what I like about those rotations is that they give an opportunity to actually make some money very, very quickly, not on the basis that the price is going to double, triple, quadruple, right? Because I'm not buying. I might be short, and my expectation is that I'm 5 times leverage on a contraction or on a correction where the price just drops 20%, right? And what I've done is I've just doubled my risk funds, and so that is the way that I'm trading crypto primarily. Those are the ones, those coins which are really kind of overextended. They start showing signs that they are overextended, and you start seeing those structures forming. That's what I'm looking at, right? And that's where I expect rotations to happen. Okay, so that's, I think, a lot of the groundwork laid. I know there's a lot of moving parts to this thought process, but it is really about joining those moving parts together. So what I'm going to show you very quickly is a technical structure which I use. It is a technical structure which is easily identifiable, and like all technical structures, like all things which are based on price action, it does take a little bit of work in order to refine the technique, but in terms of the structure itself, it is quite easily identifiable. And once you've learned to identify it, you can refine it. Once you've learned to refine it, you can use it in your trading. And whether you're using that structure as a target, or whether you're using it as an exit, or whether you're using it as a tool in order to take the reversal trade or to be looking at the other side of the trade, that is entirely up to you. What I will do is, after I've shown it to you on the chalkboard, I will show you the actual trades which I took over some of the trades which I was in over the last couple of months, and as well, these are trades which were shared with people who are in my trading group. So a lot of us were in these trades, and you'll see exactly what they were. And what you will see is that they were all based off of this one structure. It was all based off of this one technical, and so what we had was a technical which is consistent. We had a support resistance level which is consistent, a pattern which was consistent. We had a rotation that was consistent. We had a result that was consistent, and that's what I'm going to demonstrate to you. So what is the structure, right? And I hope to have some kind of aha moments, because maybe some of you will have seen it, but maybe none of you would have considered how significant it is. So if I draw something like that, I don't know how you guys would describe that kind of structure, right? Okay, I'm not in the YouTube, so if anyone's chatting in the chat, someone's going to have to fill me in, right? But I think ordinarily that is something that would be described as a head and shoulder structure. When I see a head and shoulder structure, what I'm inclined to do is to mark a wall on the shoulders, right? So I will connect the left shoulder with the right shoulder, mark a wall. Once I've marked that wall, what I will do is I will copy that wall to the head, right? And what that gives me is now a support resistance zone, right? And my expectation is that if and when it happens, that the price rotates into that zone. And what I'm usually looking for is a wide time scale retest of that zone. As it goes into that zone, I would expect that this is the place where resistance happens. End of wave rotation kind of comes out of there. Okay, so this is the default kind of structure, right? And this is where that zone represents resistance. If you want an idea of what it means when we get a continuation, what a continuation would look like is something like this. And I'm not going to be showing you examples of the continuation today, but I will map it out for you because what you do want to do is have a full picture. So if you mark, and I call these soul walls, which is just take on kind of shoulder wall, right? But soul wall, nice, easy. If you're getting a continuation, usually what tends to happen is that you get an immediate retest. The price will wobble a little bit and break through. And when that happens, if the price pulls back to that particular area, it was supposed to be resistance. Usually what you will find is that it will give you the support reaction, right? So here what we're looking at is resistance, and here what we're looking at is support, right? That's the structure. Now here are the charts. All right, let's start with ETH or ETH or whatever it is you kids call it these days, right? But this is ETH, mate. ETH.
F,
That's
F.
what it is.
It's F.
F. Not ETH.
F. Ethereum.
Ethereum. Right? That one. You realize I have zero idea.
EFF.
Yeah. That's it. I have zero idea what any of this stuff does, right? Or what it's for, right? The only thing I care about is catching a wave rotation. And if I can catch a wave rotation, I can make some money, right? So I am the worst crypto trader in the history of crypto trading, if you like. I'm not an enthusiast. I really couldn't care less what it does or what it's for or what people think it's going to do. I'm a money maximalist, a stop loss activist, and a price objection optimist, right? That's me.
Spitting numbers.
Right. So, what appealed to me on ETH, and I hope that some of you guys can see it already, right? But you see this structure here, right? Isn't that your kind of classic head and shoulders, right? And so simply done, right? Mark the shoulders. Okay, and what I'll do is let's just kind of pick this up, right? So we can really. Okay, I'm really anal about kind of marking walls exactly, right? So you're gonna have to be patient with me, and this platform is really annoying a lot of the time as well with the magnetic thing. But there's the shoulder wall. Copy the wall to the high, right? Okay, copy to the high, and we're on log. I'm going to take that off so you can see it a little bit more clearly, right? And so what you're looking at is left shoulder, right shoulder, soul wall, copy to the high, price pushes through, and there's your rotation down, right? And that's gone from 4,800 down to 4K, right? It's almost 20%. You know, a lot of the up-only crowd quite happily trapped up there. I don't know why they would want to be, but if they could look at the chart and read the rotation, they'd know that that is the kind of place that you want to be getting out, right? Not the kind of place where you want to be getting in. Okay, so so that's a trade which that's a trade that we.
Do you think it's going?
We're quite.
Where do you think it's going? This lower?
Sorry?
Someone asked, do you think this is going lower from here? Going to your head?
Do I think it's going lower? I think so, but for another reason, right? So.
What's that reason?
One of the things which I found with crypto is that if you mark your kind of 5%, 10%, 15, 20, 30, 40, 50, those kind of round digit retracements.
Yeah.
What happens is that the price rotates between 10% and 20%. So it goes and hits 20, bounces, 10% becomes resistance, right? And so as long as the price is staying below 10% correction, then my expectation would be that she rotates lower. And the downside target that I had for this was actually 3,600 in origin.
That's what I was targeting, yeah.
Yeah, right. So I got out 2/3 of my position around the 4,100 mark when she first went there, and I've held the balance, and I'm kind of okay with that, right? So you always got to make sure that bills get paid, right, and not to get overly optimistic. One of the rules which I have with targets is that I know I'm optimistic about targets, so once the price has got halfway, I usually think about getting out as much as I can, because prices rarely go to my targets quickly, right? And after a while, just I think emotionally, it starts kind of affecting me a little bit, and I start going crazy. My jokes start getting more and more cringe on Twitter. I start losing followers. It's mad, right? But no, like I said, my original target was 3,600, but I'm out 2/3. As long as she holds below 10%, I would still expect for the next rotation actually to work its way lower. Yeah.
Half the stream's gonna leave now after that.
Sorry?
Half the stream's gonna leave after that. We can only.
Yeah. Well, I think the thing is Bitcoin too, right? And Ethereum has actually been showing a lot more strength than Bitcoin.
Yeah.
Right. In terms of that, she's been running a lot harder. 10% for Bitcoin is 62. So as long as the price remains below 62, then I would expect for her to actually rotate lower, and my downside target actually remains 48K. 48K needs a back test. It doesn't matter how much Bitcoin Michael Saylor buys. And if you want some really, really bad news, and you do have to kind of consider that what if, and I don't normally use double tops and double bottoms and stuff like that, right? But what if that is a double top for real, right? And then Bitcoin is really in trouble. Even if you want to take a look, or even if you want to consider some fundamental arguments, what you have to kind of remember is that Bitcoin is AOL, right? It's Yahoo. And what you've got now are blockchains which actually have utility. They actually deliver value. They do something, right? Which Bitcoin has never been able to do, right? So probably even more people logging off.
They're gonna lose followers, you.
But I don't care. It goes
Just a disclosure, this is his views, not mine. I'm up only, by the way.
Right? But it goes up, you can make money. It goes down, you can make money. Please don't unfollow me, right? I need the validation. I need the follower numbers to get the validation, right? But it's there now. There's a whole kind of ecosystem which is developing, right? So if you're kind of looking at Solana and a whole bunch of other blockchains which are developing, they actually do something. They're providing some utility, and the problem with crypto is that it's a closed ecosystem. There's only so much real money in it, and everything else is leverage. And one of the other things which I think a lot of people haven't considered is that, although I know it's hitting a lot of kind of road bumps along the way, is that as you start getting more and more derivatives derivative products, right, which are there to supply Bitcoin, Ethereum, and other various coins. Actually, derivatives create supply, right? They don't create demand, and that's something which I think that a lot of traders are missing in the big picture, right? So if you've got derivative of Bitcoin, I can supply you. There's only ever going to be 21 million Bitcoin. I can supply you 100 billion Bitcoin if you want them, right? Because it's just on paper, right? And what you have to think about is what impact is that going to have on price and value, right? So, when you have a closed ecosystem. So, my opinion is that would have a negative impact on price, but maybe that is what helps me sleep at night when I'm fucking short, right? So, there's but there's I think there's a lot of arguments both ways, I'm sure, but one of the things that I do kind of genuinely struggle with is valuation, and to believe that once you have let's call it institutional grade liquidity, that you could get your 10% daily swings, 20% daily swings. It just won't happen anymore, because what happens is you end up with a buyer and seller at every price, right? And when that happens, liquidity dries up, higher highs become less high, right? And so my kind of expectation is that, okay, sure, Bitcoin can push higher, but is Bitcoin going to go 2x, 3x, 4x again, right? And if I was an investor, I would rather find something that everybody on social media is excited about, like these gaming coins, and say, look, why don't I invest in that? Because it has the capacity to go 2 times, 3 times, 5 times, 10 times, which is what Bitcoin used to do 4 years ago, 5 years ago, right? And so that's the kind of, there's these kind of big picture considerations that you have to have, because if you're in it for the tech, and if you're in it because of Bitcoin and because of the tech or whatever, you're wasting your time. But if you're in it for the money, you need to think about what is the best way for you to harness the capital that you have, what's the best way for you to grow it, and where you need to put it, where you need to focus if you want to be able to achieve that, right? So, all right, that's that distraction done, all right? But what I want to show you on Bitcoin is to explain to you the rotation that happened here, right? And again, I just want you to note the kind of structure that you're looking at on the left-hand side, right? Head and shoulders, mark the shoulder wall, right? Once you've marked the shoulder wall, you copy it to the high, you'll find it goes something like that. And here's your rotation, right? Okay, out of the shoulder wall. That's something quite noteworthy. The same rotation is one that we caught on oil, right? And this is something which actually we were kind of, sometimes the biggest danger with being a sharp tactician is that you see something too early. And the problem with being too early into a trade is that you won't always hold it quite as long as quite as long as you would have liked to, right? But again, if you're looking on the left hand side, left shoulder, right shoulder, head, copy the wall to the head, and what you will find is that it goes something like that. And again, we were looking at it just before the price went into the zone and holding that thing forever and just catching short taps out of it. By the time that big drop came, nobody was in the trade, right? So it happens like that. But nevertheless, that is where the rotation happened, right? And you can see that if you can recognize that structure on the left-hand side, it's quite easy on the right-hand side to know where to expect that rotation. I was speaking with somebody about this last week, and one of the questions which he was asking was, hey, it's really good for catching these rotations and for catching these swing reversals, but is it something that can happen on a smaller time frame as well, right? Because everything you're looking at is H1, H4, D1, W1, right? Is there something? Is this a structure which will work on lower time frames. And funny enough, it wasn't that much longer before I saw the exact same structure on a lower time frame, and I posted it to him. And the reason for that is that when I actually started trading, I was trading on lower time frames. I was trading M1, M5, M15, and I transitioned to trading higher time frames. And so all the patterns which I have, all the structures that I have, all the levels that I mark and the lines that I draw is all something that I learned on lower time frames, and then I started using them on higher time frames, right? And so so one of the things about the kind of techniques that I use is that you will find that they actually work even better on lower time frames, or not that better, but they're much more frequent on lower time frames. The difference is going to be the target, right? And how much rotation that you can expect. But it did happen that on pound Canadian, so what's happened? I lost something there, right? Just give me a second. I'm going to flick through the tabs. All right, yeah. So this is pound Canadian, and we're on a it's pound Canadian. We're on an M1 time frame here, right? Okay, just for and you can kind of see the structure. Okay, so it's already marked out: left shoulder, right shoulder, head, and if I rotate forward, you'll see how the price reacted off of it. So this is a classic FX trade. First tap, good for 20 pips, 30 pips. Next tap, good for kind of 50, 60 pips. And then the last tap was good for some 150, that's 60 pips there. So the last tap, good for maybe some 100, 150 of pips, right up to where price is right now, right? So it's one structure, right? It's just that shoulder, mark the shoulder wall, copy it to the head, gives you that resistance zone, and then people start kind of wondering, hey, Will, how is it that you keep hitting these highs or catching the exact high or the exact low? There's one particular technique which I use because it's kind of very easy to identify on a chart. Anytime you see that head and shoulder structure, mark it up, see how the price rotates around it, adjust your lines, get used to refining the technique, and then and then once you've refined it, it will help you to either get out of your longs or to catch that rotation and to actually have that expectation that price is going to go the other way. So as a cheeky kind of taunt, the other day I posted the Wilder on my Twitter feed, and I just want to show you where the shorts happened and why they happened. And in fact, what we should probably do, I've already got the first wall there, so let's just add into a proper color, right? So this is on a 15-minute time frame. I might even drop to a 5-minute time frame. You'll be able to see it even better, right? So that's on a 5-minute time frame. If you look at that structure, it is the exact same structure. Okay, left shoulder, right shoulder, head. All right, what are we going to do? We're going to copy the wall to the head. All right, done. All right, that's it. That's all you need to do. And once you've done that, what it gives you is the exact place where the rotation is going to happen. You can see that there. So I know everyone's going to say paper trading, demo account. I know, right? But trust me, just take my word for it. The actual trade that I took, right, was just, it's 50 times bigger than this. You know me, Saeed.
The only issue is there's no futures market for Wilder, but okay, let's just ignore that part.
Yeah. Okay, you know me. I don't trade. I wouldn't get out of bed if that trade is less than $5 million, right? Okay, so $1 million trade, obviously, it's like it's not even worth my time. But you can see where that rotation is happening.
Yeah.
Okay, and and there's a couple of arrows there for you to see, so you can see exactly, so you can see exactly where I was tapping in. That's the first place I tapped in, right? And then I tapped in a couple more there, right, to get that kind of exposure. Honest.
Good question,
Yeah,
right?
honestly.
Good question. So invalidation, right? Is it just a clean break above, or do you have like a set pip or dollar stop or percent stop?
Right. So when I'm trying to trade rotations on crypto, especially, I always have in my head this idea that you need to allow 20 to 25% on these altcoins in terms of price change, right? Which is really crazy, right? It's kind of, it's insane. But you have to allow that. And these trades, if you're thinking of them from an R&R perspective, they're usually 1R, 2R, very rarely more than that, unless there was a wider structure, right? Okay, so it's kind of, you're allowing a 20% move against you in order to try and catch a 20% rotation. But in terms of practical, so that's your kind of technical, that's your technical picture, right? Because if you didn't allow that space, what's likely to happen is that you're just going to end up getting spiked. And but if we think of it from a kind of, if we marry that technical with the practical, if it happens that the price breaks up through that level, all right, you'd start thinking straight away, all right, if I get my hourly close here above this level, or I get my H4 close here above this level, if the price has moved halfway to my stop loss, I can actually close that trade and cut it because I'm wrong. My expectation every single time I'm trading a level is that it's going to rotate, right? I don't mark levels where I expect the price to breach those levels and to run from those levels. And so when I mark a level and I see the price breach and run, I know straight away I'm wrong.
Yeah.
And one of the things which I always say to people, and I'm sure I'm sure I've said it to you as well, is that the best levels are, I have a criteria, I have a kind of 8-point criteria by which you determine what's a good level. And I'm not going to run through everything, but I'll give you one of the criteria which is really, really important, which is when you mark a level, you need to watch how does price behave when it reaches that level. And you need to watch what does price do when it breaches that level. Now, a lot of people, when I don't know about when they're learning to trade or not, right? But a lot of people really are your kind of textbook beta males, right? What it means is, when price is doing nothing, they take trades, right? And when price is doing something, they turn into pussies, right? And they kind of shit the bed. They sit there like a cat in the headlights, right? And they're just going to get run over. They end up with, I don't know what they freeze or something like this, right? But you make money when price moves. You don't make money when price is doing nothing. And that's something which is very important to realize. So when I mark a level, in order for that to be a level I'm going to mark again, I have to watch how does price behave at this level, how does price rotate from this level. And what I'm looking for is a level where I'm very right or very wrong, okay? So what I want to see on a level, and I'll kind of try and draw it out for you, right? But if that's my level, what I want to see to know that this is a good level is when the price comes here, I want to see the price rotate up.
Yeah.
If the price comes up through it, I want to see the price run.
Yeah.
All right. And so one of the things that you'll notice about the trades which I mentioned on Twitter is when I get it right, I can be really right. All right. But when I get it wrong, boy, am I fucking wrong. Right. I'm never just a little bit wrong. What you won't find with my trades is the price comes and does this and then goes duh. Okay. What you'll find is either the level holds or the price runs. Okay. If price does this at that level, you know what I do? I stop marking that level. It's no good to me. Right? I need.
Would you say that's a pattern failure then? Pattern failure then. So you take the opposite end.
Pattern failure, right? Because like, I tell you, I really hate the word setup, right? Setup is such a loaded freaking word, right? Okay, and because I do not have a setup, right? People say, or people say buy setup, sell setup. I don't have something called a buy setup. I don't have something which is called a sell setup. What I have is, hey, I feel like selling it. Where should I sell it? I feel like buying it. Where should I buy it? And I'm going to give you a perfect example using the same chart, right? Let's say I wanted to buy this, right? So I came to this chart with a view that while the world, whatever that is going to go higher, right? What I would do is I would mark the exact same level, and I would say, okay, what's this? Right? That's my SR zone. So what do I want to see? Price has to break up through there. Got my pattern failure, do a round test, right? And then I'll buy, and it'll just go boom. Right? The exact same level. Right? So one time you'll see I can post a chart and I'll say I'm going to be selling that. Another time I could post the exact same chart with the exact same level and I want to buy that. Right? But the entry criteria is different. Right? So I have a buy setup or a sell setup. Well, I don't even want to use the term, right? But, we're quite gender neutral like that, right? We're gender neutral. It's not buy setup or sell setup. It's a place where you do business. And you could come to the market with a view that this is an instrument that needs to deflate, it needs to rotate. Again, it's not the subject of this particular presentation, but I have a process by which I read a market and I decide, hey, this one matches all the criteria of a market which is ready to deflate, right? And so if it matches that criteria, I will apply my setups, but I'll be looking for the shorts. And if I expect that there's going to be an expansion, I would apply the exact same technicals, but I would say let it breach, pattern failure, look for the follow through, right? And get that momentum trade. Okay, so yeah, this idea of, I think, buy setup, sell setup, it messes up a lot of traders because what it does is it resigns people to taking one type of trade, right? And it doesn't really reflect a proper understanding of support and resistance, and just the idea that resistance isn't for selling only, right? But resistance is for buying if resistance is breached. And once you have that idea in your head, you can be much more flexible about what you're trying to do with the levels that you've marked on your chart, right? So shall I even bring up sand? What is sand? What does that do?
It's a good shitcoin that's made a lot of money. That's all. Number go up. That's it. That's all people care about.
Okay, but so just to maybe give you a sense, right? Look at that. Okay, that started at 50 cents or something, right? And it's traded at $8.
It was less than that. It was less than 0.1 at one point.
Okay, so that's doing something which is quite insane, right? And you can kind of see that, and then you have to start kind of thinking, okay, that chart doesn't have a lot of structure, but if you log it up, right, all of a sudden it has structure, right? You're kind of getting over and under, which is one of the support resistance. So this will be familiar to a lot of people as that kind of sine wave structure, which is typically what price tends to do, or it's a target that price tends to reach before you get a contraction, right? And so she's reaching that, that looks to me like she's reaching that kind of place where she might want to give up, right? And having seen that, it was kind of interesting to me that all of a sudden we're kind of getting this, I don't know, you might want to close your eyes right now, Saeed. I don't know if you want to see this, but
as long as it's a PYR,
but all of a sudden you're kind of getting that thing going on.
Oh shit!
Right, and then that has me thinking, okay, what happens when the price comes into here, right? Okay, because whether I get it right or wrong, right? If I'm right, I'm going to be really fucking right. Okay, and if I'm wrong, fine, right? Price will break through, come back. When she pulls back, that can be the place where I can look to buy, right? And kind of get my momentum trade. But if she pushes up into there, I would be quite keen on looking for a rotation. And there's a similar story, which is actually going on with PYR.
Don't you dare!
And,
Fuck.
I mean, the thing is this, right? That
I'm emotionally invested into this, okay?
All you've got to do is just look how far she's come.
Yeah.
Right. Once you've seen how far she's come, right? Isn't it kind of fair game to be saying, okay, she could rotate out of there? I mean, what is PYR? What does that
Doesn't
mean?
matter what it is. Just some hyping it up right now.
Yeah, that's it, right? So, I mean, look, bro, you did good with this one, right? Did you call that when it was
I got it $3, man. I made shitload on that one. It's probably one of my top 2 coins. I'm done for now for crypto, but it's just extra money now.
There you go. Right?
Yeah.
She's gone 10 times, 15 times, right? And there's going to be a lot of people who are going to be thinking about, maybe it's time to go to.
This is where my Twitter account comes in and it just flipping artificially pump it. Joke.
Oh yeah.
Joke.
I mean, I noticed what you did with Wild. I noticed you did that. Wild,
I did that out. I did that.
Bro, stop it! Get out of my way. Was it here when you called it? And then it just went boom.
That was me.
Right?
That's Twitter. That's so weird for it, man. I think I got these bots tracking my account. I mean, I'm pretending that I don't know about it, but yeah. Every time I tweet, some of these flipping moves, but yeah.
Will the real McAfee stand up? There's a McAfee game, bro.
I used to have coin of the day, and they would pump it together. Good days.
Yeah, if you've got that, you've got to use it. It's the only right thing to do.
Exactly.
Right. The number of people who don't understand how crypto works, right, is insane, right? But it is the world's largest pump and dump scheme, right? And so, if everyone is aping into something, a lot of people will make money, and everyone is dependent on the greater fool, right?
Everybody's somebody's exit liquidity. That's what it is.
Yeah, that's it, right? The last guy to buy is always going to get fucked. It's musical chairs, right? So, but the thing is, with musical chairs, you're left with one chair at the end. At least in this game, it's a little bit more democratic, right? At least, I reckon, at least 10% of people in crypto make money.
Yeah, the rest will become hodlers. They'll be up shitloads.
That's my conservative estimate. I wouldn't be surprised if there's more, right? But the lucky ones, like in any game, are the ones who get out in time.
Yeah.
Right, and so you've got to get in, make your money, get out, and
just keep rotating it as well. Then once you've got enough money to say, you're sorted, take a small portion, keep rotating it risk free, because you don't give a shit by then.
Yeah. But no, it's a game, man, and it's a game, and that's how the game's played. I think you took a lot of flack over the weekend.
Yeah, you see the guy got. This is what it is, man. If market's going down, everybody just becomes a bitch. But these guys, you're dealing with insults. You're dealing with virgin insults. I've never been at the house before. So when this builds up and been raised by no male figure, just women in the house, this is what happens. But anyway, let's not go down that path. But
anyway, like I said, I only came to Twitter for the memes and the drama. There's no shortage of that on tap, is there?
No, at all.
Right. So, but look, that's it, right? That's wild, right? It's the same on PYR, right? It's in play. Okay, any pumps into that, I will be shorting it. I'll be straight up.
You can't short this market. There's no futures.
I've never been shy.
I'm gonna convince you. This is the only market I'll be bullish on non-stop. This is going up only. So what are you gonna look for? The pattern failure. So if the pattern failure, that should go to like 100, right? Listen, I need to pump this thing.
Right? So
don't mess my plans.
If she's going up through there, right, you're going to be looking at something like that. Any pullback.
So the best time for me to tweet is when it gets back to 45. So when I tweet that and I failure pattern up with my tweet. Okay.
Yeah, but you know, like one of the things which I like about levels is when the price goes and hits them really hard, and the harder it hits a level, the more likely is it's going to exhaust, right? So, so when you did that yesterday,
I've done a lot of things.
I was
Listen,
gonna
man,
say,
I'm got enough heat on me as it is. Don't make it worse.
when you did that yesterday, you fucking did that, right? Okay. To me, that was a gift horse, right? Because I was like, yes, go and exhaust into my wall, right? But it's it's like one of the things that's fine is like the harder it hits a level, the more likely it is the price is going to bounce off of it. But if it goes and hits a level soft, chances are it'll just work its way through it, right? And so I like seeing these kind of exhaustion candles as it goes and whacks into these levels. But in any case, that's what a shoulder wall is. That's what it looks like. That's how you draw it. Easy way of catching rotations, right? And all you've got to do is just kind of look out for them. When they're there, you've got pattern failure. It's a tool. Add it to your box. Use it.
I've learned that. I've learned something new pattern today because I was looking at something similar. So we see where your high is. That's confluence with about 45 level I had. So I love that confluence with PYI anyway. I learned something new.
Sure.
Yeah. So would you want to share? I mean, obviously you're my mentor, so obviously I'm gonna have to share this because I've learned from you. But if anybody wants to learn your method, this is the time to share it, man. This is someone I vouch for everybody here. So yeah.
I'm too old and too tired.
You stop mentoring now. You stop mentoring.
I do do mentoring, right? But I take on maybe 6 people every year, right? And it's very intense. It's handheld. It's I do a lot of hand holding.
It's been a decade since, so yeah, you've aged a lot since. So
yeah, and say, hey, come on, look, let's take a trade. This is why we're doing it and whatever, right? But if you want details of my mentoring program, it's going to be on my website. It's wmdforex.com. Look up Legacy Program, and then get in touch with me on Skype or something like that if you want to chat about it.
What about Twitter? Are your DMs open or closed? Or?
Yeah, my DM's open on Twitter. You can ping me. You can ping me on Twitter, and then maybe we can line up something for next year or something like that, right? But like I said, I only mentor a handful of people every year, and it's I always kind of feel, like when I know what you're doing is a little bit different, right? Because I think you produce a lot of content.
To be honest, I do it because I'm bored. I mean, I'm waiting there for my swing trades. It actually passes the time. So
yeah, I suppose it's a good way to do it. Me, I like watching, YouTube.
I'm watching that all day as well. But even then, man, I've been through all the documentaries there are on YouTube. There's nothing left. That's why I shitpost all day.
Yeah, so yeah, but in any case, check out my website, wmdforex.com, or DM me on Twitter if you want to get on board with that. And I think next sessions will actually, they will be early next year, right? So usually I have sessions about once a quarter or something like this. But look it up on the webpage and then DM me if you're interested, and we can put something together.
I want to say thank you very much for coming on, my bro. I need to bring you on again. I don't know why it took so long. I mean, I think this is the highest retention rate I've had on this, so everybody's enjoyed it, and you've given a strategy out for free. So we appreciate that. Everybody give WMD Forex a follow. The handles in the title of this video. And thanks to our sponsor, Delta Exchange, for sponsoring the show. They make it all free for you guys. Like the video, subscribe to the channel, and I'll catch you guys next week. Bye-bye.